Let's look at how to record an inventory gain or loss under the identified cost method. So what is that method? It's where each unit of inventory is physically marked, for example, with a sticker, so it can be individually identified when a transaction occurs. And these are all the transactions we need to know. And we're finally up to these last two. What do we do when there's an inventory gain or an inventory loss? So let's take an example. Inventory gains. The rule is we are going to identify the actual unit that's gained. So let's take an inventory card all the way to the end. And we've got May the 3rd, purchased 5 units for $44 each, including GST. We're going to get the GST out of that and say it's 5 units in at $40. And let's say it's chairs. We're going to put pink stickers on those so we can identify them when we sell them. Then we sold 3 units for $100 each. Remember, that is the sale amount. We don't put the sale amount in the inventory card. We just want the cost amount for this transaction and the document number. And all this inventory had pink stickers. So I put the date. I put the document number. I'm going to say it's 3 units out at $40. And that leaves me with 2 units here at $40 each for a total of $80. Then we purchased from wholesale chairs 10 units for $50 each. So we take the GST out, and then we've got May the 11th, invoice A34. And once we get the GST out, we've got 10 units at $50 for a total of $500. So that leaves us with 2 at $40 and 10 at $50. Then we sell 4 units for $110 each, including GST. We don't want to see GST in an inventory card, and we also don't want to see the sale price. So I just want to know how many units went out on that cost. And it says one chair had a pink sticker, and the other chairs in that sale, so there were 4. So the other 3 had yellow stickers. So that will be an out because I'm selling inventory. I got rid of 1 unit at 40 and 3 units at 50. So I am left with 1 unit at 40 here. And I've got 7 units at $50, and I've put yellow stickers on those. And then the following happens. An inventory count reveals 11 units on hand. Well, according to my inventory card, I should only have 8. I should have 1 of these and 7 of those, but I've gained 3. Which 3? Well, the rule says the actual unit has to be identified. So as it stands, I can't answer this question. So I need more information. And it says 2 of these units had pink stickers and 9 had yellow. Now at the moment I've got 1 with pink, so I've gained an extra pink one, and I should have 9 with yellow stickers, and I've only got 7, so I must gain 2 yellow stickered ones. So I'm going to do the date here. It'll always be the last day of the period. That's when we do an inventory count. I've got the memo number. I gained 1 chair at 40, and I gained 2 chairs at 50. So that means I'm left with 2 units at 40 and 9 units at 50. Now 2 and 9 is 11. That matches my total here. So that's excellent. And the reason I'm doing this is so I can do my general journal entry. So the general journal entry required for an inventory gain is a debit to inventory because it's going up, and a credit to a revenue called inventory gain, but I don't know the amount. If I just look at this here, I don't know the amount, and that's why I did this inventory card, because over here I recorded 1 at 40 and 2 at 50, and if you add those two numbers together you get 140, and that's the amount I'm going to use there. It's very important. It's probably one of the more likely questions for a narration and inventory gain or loss. So I'm going to make sure I'm going to write inventory gain of 3 units revealed from the inventory count and the memo number. And just with that memo, just try and be as detailed as you can. So if you've got the type of unit, say hats, for example, or shoes or something, say that. But as a minimum, put the type of the unit, the number of units, and the memo number. What about if there's an inventory loss? Well, same rule. The actual unit is identified, which sounds a bit odd. How do you identify something that's gone? Well, let's just take the exact same inventory card and the exact same circumstance. So here's where we were at before the with the last set of examples. So what we've got here is a credit sale of 4 units, and that left us with 1 chair at 40 and 7 units at 50. But this time when we did an inventory count, it only revealed 4 units on hand. Now, it says here I should have 8. I should have 1 pink one and 7 yellow ones. But because I need to identify the actual unit, I can't answer this as it is. I need more info. So it says all 4 units left had yellow stickers. So that must mean I don't have this pink one anymore. So that's gone. And I should only have 4 yellow chairs, and I've got 7. So I'm going to have to get rid of 3 of these. So I'm going to get rid of 1 pink and 3 yellows, and if I do that, they're going to be outs because they're gone. So I've got 1 at 40, 3 at 50, and I had 1 pink one the day before at 40. That's gone, so I'll leave that blank. We don't write 0, 0, 0. And then I had 7 at $50, the yellow ones. Well, 3 are gone, so that leaves me with 4, and that matches what the inventory count revealed. So it's all good. Why am I doing this? So I can do my general journal. So this time, the general journal entry would be a little bit different. This time I'm going to do a debit to an expense called inventory loss and a credit to inventory. Because it's going down, that will be a credit to the inventory account. But the amount, how did I get the amount? Well, that's not given to me in the question. So that is why I have my inventory card. And down here I did one, the inventory loss was 1 at 40 for 40. And 3 at 50 for 150. If I add those two numbers together, I get 190. So that is the number I will use. Again, we'll give a detailed narration. We'll say inventory loss of what the units are. So it says hats. So we've got that information. We could say chairs in this case. We put the number of units and the memo number. And that is everything we need to know at the moment for the identified cost method. We've already done all these other transactions, so now we can update our table and say for an inventory gain, the actual unit is identified, and for an inventory loss, the actual unit is identified. So with the identified cost method, really, it's a simple rule, except for purchase returns. Just note that when we do those ones, the cost is determined by the supplier on the credit note. Otherwise, we are always going to identify the actual unit.